Welcome to the Global Gaming Business Podcast. My guest today is Jay Snowden, the president and CEO of PENN Entertainment. Jay, thanks for joining us. You're here at the East Coast Gaming Congress at Hard Rock in Atlantic City, and I know you enjoy coming here and speaking to this great audience we have. And I liked your questions today. I mean, you focused on some of the benefits and dangers of AI, and that certainly is true. But let's just start with. You've been getting a lot of attention for your online gaming things these days, but that kind of overshadows what the strength of the company is, which of course is your land-based operation. So let's start there and talk about that. How were the revenues last year, and which markets were your strongest?
Yeah, first off, thanks for having me.
Sure.
Always great to be here with you, Roger. We did this for the first time in my office at the Showboat, I think 20 years ago.
Yep.
And always enjoy doing the interviews with you. So thanks for having me as well. We'll talk about interactive.
Sure.
I'm sure later in the podcast. We'll start on the retail side. Yeah, we're feeling really good. There's a few things happening right now, Roger, that are sort of tailwinds for PENN.
Yeah.
Specifically, one, it feels like every year for the last 5 or 6 years, going into the year, there was going to be a new supply impact in one of our key markets from a competitor, whether that was the state of Nebraska legalizing or new casinos in Chicagoland or Bossier City, Louisiana. So I would tell you that going into 2026 and even looking out to 27 and 28 is the first time in some time that you don't see that big supply shock coming your way as a headwind.
Right.
So because you don't have that, and now you're starting to lap an anniversary, the openings of the competition in Nebraska and Bossier City and Chicagoland, that's going to benefit our core business from a same-store sales perspective, because though the industry on the regional gaming side is largely mature, we're still in a number of growth markets and growth states that can show growth overall for the company, as long as we don't have that headwind hitting us hard in one of these other markets. So we have several markets that have shown nice growth over the last several years, and we would expect that to continue in 26, which would be the whole state of Ohio. We have 4 great assets there. We're in the process of opening a new hotel at the Columbus property in June, which is very exciting. Nevada, locals, M Resort has been a really nice growth market for us for some time now. Our little property in New Mexico, which from a revenue and EBITDA standpoint is not so little, but the property is little, has been a nice growth market for us. Massachusetts, Plain Ridge Park.
Sure.
And I would say when you look down south, LaBerge, Lake Charles, which is one of the top producers from both a revenue and EBITDA perspective for us, just continues to grow every year.
Yeah.
And we've got a great leadership team there. I'm blessed with great leaders across the organization that make my job a lot easier. As difficult and complicated as our business is at PENN, with all the different states, they make it look easy, and it's not. But we've got a deep bench of talent. And 26 is looking and feeling good. The no new supply coming our way, combined with the growth projects. We opened Joliet water to land conversion last August. We added a tower and almost doubled the number of rooms we have at the M Resort. I'm sure we'll talk about that. And then coming up in June, we talked about the Columbus Hotel. We also have the Aurora, Illinois water to land project, $360 million investment right next to the Chicago Premium Outlet Mall, millions of visitations a year. So feeling really good about that. And we also announced that we're going to go water to land in Council Bluffs, Iowa. That project has not broke ground, but we're very close. And it's around a $200 million investment, probably end of 27, early 28. So you got these catalysts kind of in front of us, and a lack of headwinds, which we enjoy.
Yeah, I stopped in Council Bluffs last summer on my way back east, and it's a pretty worn out. All the facilities are pretty worn, So a new property there, a brand new shiny property, I think will do really well there.
I think it'll be well received in the market, both on the Iowa side as well as on the Nebraska side. We've been dealing with some new competition in Nebraska. But when we open this property, it'll be the newest in the market, and I think we'll get a lot of trial. And then it's our job, obviously, to turn trial into relationship and loyalty.
Yeah, I was there on a Saturday night. It was very busy, but some of the machines, not in your property, but in one of the other properties, was like, wow, where did they pull that out of? In 1980, It was crazy.
There is still some of that.
So you mentioned M Resort, and it's a great property. I really liked it even before you guys owned it, and now that you've owned it, really stepped it up. But it's next to the Las Vegas Raiders practice facility, and it's the official hotel of the Raiders. How much benefit did that give you?
More than I thought it would.
Yeah.
I would tell you it's one of those really rare partnerships where both sides have obligations on paper that we signed up to, and both sides, I think, go above and beyond what's in the contract because the relationship has been so good, so powerful, and just continues to grow and grow. And we have a great leadership team there. Our general manager, Hussein Mahrous, really embraced the Raiders organization and the partnership, and the property shows well. So the Raiders players, the Raiders staff, the coaches, you can walk through our facility any time of the year because so many of the Raider players and staff now live in Las Vegas, and you see Raiders folks everywhere. They love the steakhouse, they love the Italian restaurant, they love the Raiders cafe that we have there. You would almost think, and I give a lot of credit to Hussein for this, you would think we're part owners in the Raiders because of how it feels when you're on property, and it just shows how much he embraced the opportunity and how much the Raiders have reciprocated.
Sure.
And so I would say it's been a total win-win, and adding a hotel there was a no-brainer. We worked for a while just on the budget to make sure it was going to be right size where we could deliver a really nice return for our shareholders. We got it to that point at $200 million. And the challenge we had at M Resort for a number of years is that on the weekdays, it still is kind of a more of a convention group business outside of locals gambling. The challenge with 400 rooms is that you bring a group in, they need 100 rooms this year. They have a great experience because we can give them attention that they're not going to get with a 100-room block on the strip at a 4,000-room hotel. And they love it. They want to come back next year. Okay, great. Well, now we want 200 rooms. Okay, we can accommodate that for 200. And then they have a great time, and then they say, we want 500 rooms. Yeah. We don't have 500 rooms. Right. So they would outgrow us. Yeah. We would cultivate these relationships, and then they would outgrow us. Now, the good news is they didn't forget us. Yeah. And since we opened the second tower, we've had a lot of that business come back to us, and now that we have close to 800 rooms. Yeah. And the first couple of months, I mentioned this on our last earnings call, it's really encouraging for several reasons. One, again, I'm not saying this is going to last forever, but the first several months, the demand has been so strong, both on the gambling side as well as on the group business and the leisure side, so all three, that most days when you look at the hotel results and look at it year over year, even though we didn't have the extra tower last year, the occupancy is about the same and the average daily rate you're charging is the same. But then the total revenue is much bigger. So we didn't have to discount is the point. There was a lot of demand. We didn't have to drop prices weekday and weekend. It's been a success, and it's only going to build from there.
Yeah. Oh, that's great. So let's talk about Louisiana. It's an important state for you. You mentioned L'Auberge Lake Charles. I was there when it opened. Dan Lee showed me around. I was just talking about that the other day. How at that time you had to have a captain, on the roof of this casino, which was floating in a moat. But you were required to have a captain there full time. That's right. I don't know if that's still a requirement.
You'd be surprised. That's a conversation for another night.
Okay, great. But that's important. And then you built the L'Auberge Baton Rouge, another first class property, and then you've got the Boomtown properties around New Orleans
and Margaritaville.
Yeah, absolutely. So how important is Louisiana to you? Especially, I just interviewed David Cordish. They just opened up the live casino down the street from you in Bossier City.
Yes, yeah. They opened that property. So we'll start with Bossier City. The live property opened in February of last year. So we've just now anniversaried the opening. The first 12 months, it was a big shock to the market. Now, keep in mind, Bossier City, Shreveport as a combined market, other than the 1 year post-COVID where everything was growing, has been in decline for almost 20 years because of the casinos in Oklahoma that are now closer to Dallas than Bossier City, Shreveport is. So tough market to absorb new supply. I love David Cordish. He's a friend. That was a painful one for the rest of us incumbents in the market. The good news is we have the best asset, highest quality asset in Bossier City.
I was there for the opening of that too.
Margaritaville, it's beautiful. And we've continued to invest, full hotel renovation, new restaurants. There's a lot to do on that property, and so it's been resilient. We've definitely lost some market share because of the new entrant. But I would say now that we've anniversaried, we're stabilizing, and I think from here we can start to grow again, which is exciting. Baton Rouge, there's a couple of new properties there. I know you interviewed Sue Kim earlier that are Bally's properties. And I would say, we're feeling some impact there. I would also say that our LaBerge property in Baton Rouge really is in a class of its own from an investment standpoint. And so our core customer is a little bit higher end, and you definitely feel some impact anytime there's new supply, but I'm very happy with how the team has responded and our ability to protect the revenues and the cash flow of that business. Our team members deliver excellent service, and it's noticeable when you're on property. So Baton Rouge feeling pretty good, all things considered. Lake Charles, look, we duke it out every month for first highest revenue in the state with Golden Nugget, my friend Tillman, and of course the new Caesars New Orleans expansion. The three of us just kind of bounce around for second, third, and it's a great place to be. Our Lake Charles property is run by Harold Rowland, our general manager, and he and the team there do an excellent job. And it continues to be one of the top producers for the whole company. Now, New Orleans, Boomtown for us is an interesting one because that's another, I've been asked the question before, and we haven't announced anything yet because we're still analyzing it. That would be another one of those in the portfolio that we could potentially go from water to land and build something new. And we saw, I think Boyd Gaming did a great job with Treasure Chest and growing revenues 100% year over year. Our Joliet property is growing 65% year over year. These water to land projects, if done right, you can get a really nice return. And I'm excited about what we're seeing in Joliet. We're going to have Aurora to analyze post opening. I think that the results there should be every bit as good as what we're seeing in Joliet, maybe better. We have a hotel, we have a spa. It's kind of a bigger version of what we did in Joliet. And that market, that part of Illinois hasn't seen anything new in a long time. So we're optimistic there, and that builds the case for other projects, potentially Boomtown, New Orleans, to go water to land. So I would say stay tuned. It's something we're analyzing, and could be a great opportunity for us to start growing again because it's a tired facility and it's been declining in revenue the last several years.
So in Texas, you operate two racetracks. Kind of a flashback to the founding of your company from Penn National in Pennsylvania. How are they going, and are you enthusiastic about possible gaming in Texas?
Well, lots to that question. I would say I view the two tracks that we have there. We have two of the three thoroughbred tracks in the whole state. Retama, which is San Antonio, Austin area, and then we have Sam Houston, which obviously is in Houston. The third track is owned by the Chickasaw Nation, and it's Lone Star in the Dallas-Fort Worth part of the state. And Chickasaws we're close with them. We obviously have a shared interest in terms of, we have big businesses in Louisiana. We have a business in New Mexico that does draw from Texas. And Chickasaw, their business, WinStar, is the largest casino in the country, maybe the world. And they pull from Texas. So it's good to have partnership there in terms of the thoroughbred interest and how that may down the road turn into a potential gaming opportunity, casino opportunity. So I would say it'll be interesting to see how things play out. It has not been a popular idea politically. Things change. I'm not going to place a wager on when something like that could happen. So I view it really as optionality. And if something were to happen in Texas, I believe that we're positioned well there, and we have great relationships all across the state. And thoroughbred racing is appreciated and respected as an industry there, and so we invest in those tracks. I think we've built a very strong reputation, and I'd like to believe that we would have a seat at the table if something were to happen. I don't know. It's probably a when, not an if you look out far enough. The legislature in Texas meets every 2 years, so it's either going to kind of happen and ahead of time, or then it's just quiet the following year. So we're positioned well. We would welcome it, of course. There would be some impact to us in Louisiana and New Mexico, but likely more than offset with the opportunity if something were to work out for us at Sam Houston and Retama.
No chances for like HHR machines?
There hasn't been any desire or interest at the state level. Again, things can always change. We take our cues from the regulators in every state, and the Racing Commission and I would say state lawmakers have been very clear, no right now, and so it's been no. And maybe it turns into a yes down the road. We would welcome that. It would be great for the state. It would be great for thoroughbred racing in Texas. But it's got to be done when the state wants it,
Sure.
and that hasn't happened yet.
So, we just mentioned a few of the places you operate. I mean, you operate all over the country with a lot, and again, a lot of diverse businesses. How do you keep track of all that? I mean, I know you have great people like Justin Carter.
Yes.
We're running some of the regional things. So I guess you have more guys like that, and
I'm blessed,
Yeah.
Roger. Rafael Verde is another one of our heads of regional operations, Aaron Rosenthal, and you mentioned Justin Carter. And they have folks, our chief marketing officer, Jennifer Weissman. A lot of us have been doing this for our whole careers.
Yeah.
I grew up in Vegas.
Mm-hmm.
I love the business.
Yeah.
And so when you've been doing it the way that we do it, we've built this operating structure, and we have the right people leading the properties and leading the regions in this operating structure. And if you look across the industry, we still to this day, by a good margin, have the strongest tax-adjusted EBITDA margins. And so we're proud of that. You always got to get better, and we are continuing to work to get better. I think this is a year where we're really focused on execution. And so I feel fortunate because the folks that we mentioned and the operating structure we've put in place really does allow this to run pretty smoothly. And I also love the business, so I know what to look at every
Right,
morning
sure.
and every
Yeah.
evening, and the reports that we generate. And so I can kind of identify if there's an issue pretty quickly, because I've been at this my whole career,
Sure,
and I
absolutely,
do love it. So I would say it is complicated. I don't want to minimize that
Sure,
at all,
right.
but the structure and the people we have in place, down to our line level employees at our properties, just execute so well that it looks easier on the outside than it is.
For sure. So we're here in Atlantic City. I know at one point you got a chance to look at Revel at the time, and turned away from that. But there might be some opportunity here. Obviously, Atlantic City has the threat of the New York casinos in there. But with your friend Tillman coming in, possibly buying Caesars, he's got to get rid of one of those properties. I mean, any chance you would be interested in Atlantic City at the right price?
I would never say never.
Yeah.
I am, like you mentioned, and I think the rest of us in the industry are just wanting to see what will that impact be when those 3 Southern New York licenses get up and running. How much of that Atlantic City business that comes from North Jersey does that change? And I think that there's probably going to be, my guess would be that there's going to be some winners and losers in Atlantic City.
Mm-hmm.
You've got the Borgatas, and I'm staying at Ocean for the first time.
Yeah.
It's a very nice property.
Very nice,
I give that ownership group and the management team there a lot of credit. They've built a nice business. They've recruited really strong people.
You compete with them in Detroit.
That's right. It's exactly right. And I would never say never.
Yeah.
There's going to be some assets that could be attractive, but I'm not anxious simply because of New York. Now, if something comes along and it's at the right price, and we believe right price, considering the impact of what New York will deliver, then we would take a look at that.
Yeah.
But I would say it's not something I'm proactively doing.
Okay, great. So let's move on to the interactive. And I don't want to go through the whole story. We all know about Portnoy and ESPN, but now your service is going through the Score,
Yes.
which you bought that in Canada, and they're obviously the big operator in Canada. How's it been doing in the U.S. so far?
Yeah, well, look, taking a step back on the interactive side, I very much view this journey as an evolution.
Mm-hmm.
Has everything worked out the way that we thought it would?
Right.
No. But I would say, I don't think if you're in the land-based side of the gaming industry, I don't think having an interactive business or a digital business is an option.
Mm-hmm.
I think it's an imperative.
Yeah.
I think it's a requirement. Because look where the industry is headed.
Right.
There are not a lot of states left that haven't legalized land-based casinos that are considering doing so. There's a couple out there, but there are not many. Or Texas, it could just be really far down the road. And there also isn't the obvious M&A opportunities in the industry that there were in the 2000s and 2010s. There was a lot of consolidation during that time. We were involved in much of it.
Sure, right.
So if you look at where the industry is headed, whether you're talking about online sports betting, online casino, prediction markets, I'm sure we'll talk about a little bit as well, and I spoke about earlier today at the conference. If you want to compete, and I think you're looking out over the next 5 and 10 years, we know from having been in this industry a long time, one thing is inevitable, which is states tend to run budget deficits, and we are an industry that they do come back to.
Right.
We don't like the tax raises.
Okay.
And so what else can you put on the table that can be a win-win? And I think iGaming, and this is one part of the story that I think is sometimes misunderstood, is that 60% of our iGaming business started it started off as online sports betting.
Yeah.
Okay, so you have customers that are betting on sports, and then they do both. So if you're not in the online sports betting business in a state that launches iGaming, you're playing from behind.
Yeah.
Because 60% of that revenue does come from sports betting. That's where it was sourced initially. And so sports betting in and of itself is not a profitable business for us. The Score is a very strong brand in Canada, and I would say it's a solid brand in the US. We are happy with our market share in Ontario with the Score, both sports betting and online casino. Alberta is now going live in July. And the Score is the #1 digital sports media brand in the whole country. It's not an Ontario brand; it's a Canadian brand.
It's the ESPN of Canada.
That's exactly on the digital sports side for sure. And so we're ready for that opening in July, or that launch in July. We'll be working closely with the regulators and the province of Alberta to make sure we're doing it the way that they envision. And I would anticipate, certainly our goal internally is to see market share results similar to what we've seen in Ontario. In Ontario, we launched strong and we've grown every year.
Right.
And I would expect to see similar trends in Alberta. Now, keep in mind that in the US, in states that we operate with the Score sports betting brands, and it's only sports betting, we're sort of in maintenance mode. We're not investing a lot there because there's not a lot of money to be made in just sports betting. But there are states like Pennsylvania, and New Jersey, and Michigan, and West Virginia that have both.
Right.
Along with Canada, those are the states of our focus. If a state is a hybrid state where it has iGaming and sports betting, we are focused on that, and we are growing our iGaming business at or above the market rate since we launched our standalone Hollywood casino app. And having that brand connection has been very, very helpful. So we see continued growth in iGaming. Sports betting, we're a little bit more in maintenance mode.
Yeah.
Limit losses, focus on cost structure and lowering promo expense, and put that all together with Canada. And we've got a business now that is no longer going to be losing money.
Right.
It's going to start making money here very soon. And as I said, for this year, it's going to be break even. Other than the Alberta launch, as I mentioned in the last earnings call. But those losses are now behind us, and this is a business that, one, will be growth for us. It's EBITDA without rent.
Right.
And it also is where I believe the industry is going to continue to go.
Yeah.
And so we'll be ready to compete, whether it's some form of prediction markets, they win in the courts, and market making and things of that nature could be an opportunity for us.
Yeah.
And of course, iGaming, I believe, in states that already have OSB is likely coming because states are going to come back and they're going to need some money.
Right. No question about that. So a couple of years ago, you told me you developed an in-house content provider. Is that still active, and how's that helping your Hollywood casino app?
Yeah, it's called PENN Game Studios. It's still functioning. We actually are. I would say, if you look at our digital blackjack business, most of the volume on the digital blackjack side comes on games that we created in that function. And so the studio continues to put out really good content. It works in Canada, it works in the US, and anytime that your customers are playing your games, you're not having to pay revenue shares to partners. And we love our partners, but the economics obviously are better on games that we launch in-house, proprietary. And so I think you should expect to see more of that.
Sure, okay. So today, during your speech at the East Coast Gaming Congress, you talked about AI and the dangers of AI. I mean, there's obviously advantages to it, but people kind of downplay the dangers. And you talked about deep fake AI. And the last time you were here, you had a recorded message that somebody duplicated your voice and asked for a cash transfer. And,
yes.
So how are you able to prevent that from happening? You just have to have like dual focus authorization, or
There's so much we have to do, and we are doing. And what do you need to do? That the answer to that question is changing every hour.
Yeah.
So a lot of it's just on awareness and education and training. It's going to become more and more complicated as time goes. From a cybersecurity threat perspective, the deep fake, the phishing emails, the voice copying, which we've had attempts, as you mentioned. I talked about that 2 years ago and actually played the voicemail that was my voice, but it wasn't me, asking for a wire transfer. So there's a lot going on. I would say that artificial intelligence, there's also opportunities. I think as you think about customer and database analytics, our ability to code, software engineering. There's a lot of opportunities within AI that impact the business in a very positive way. Right. We're working closely with the regulators to make sure that they're knowledgeable about those opportunities and on board with the things that we're doing or planning to do. And there's also the risks and the threats that you have to be aware of. And I think as an industry, and we share with our competitors when things happen, and they do with us as well, because we're all in this together when it comes to defense opportunities.
Right. So again, once again, there's been instances. I know Matt just mentioned something about a Hong Kong company, who had one of those deep fake things, and they lost $25 million. I mean, is there any way to safeguard against that kind of thing happening?
It's again, education, training. We're constantly updating our policies. We're constantly running our own sort of fake phishing expeditions, so that we can learn together on what to look for. We've made it very clear, for example, within PENN, the CEO of the company is never going to call you directly and ask for a wire transfer. Never going to email you directly and ask for, don't tell anyone, I need you to do. Never going to happen. Felicia Hendricks, my CFO, she's never going to. So our team members don't get nervous when these things happen. They ask their bosses, like, hey, I got this weird email from Jay or Felicia asking me. So we do, because we preach please question this. Don't do it just because somebody in the C-suite said to do it, because it's probably not us, and we wouldn't do that. So a lot of it's just, we're evolving, we're learning, Roger, and we're sharing best practices both internally and with competitors to make sure that we stay on top of this. Right.
This is also something that happens in the sports betting arena there. Some of the stakeholders in sports betting, are anxious to close the gaps they have there. Are there ways that AI can catch that kind of thing?
Can be very helpful. Can be helpful with identifying maybe gamblers that have a problem. It can be helpful identifying trends that maybe you catch those earlier. If there's a lot of wagering on a game that you wouldn't expect that wagering on that game to take place, or on player props in some of these markets and some of these sports, having AI, which can just work faster than a human can, identify some of these and elevate, and then let us quickly discuss those with regulators and respond. It's all helpful. So again, I'm not in the camp of like everything AI is scary. There's things that you need to be prepared for, and you need to stay on top of. But there's also a lot of aspects of artificial intelligence that can be really good for the business, really good for responsible gaming, and I would say overall good for making the industry stronger.
Okay, great. So let's talk about prediction markets. I did a panel yesterday, and we had one prediction positive guy on the panel, Alex Kane of Sport Trade, who was very respectful and really knew how to frame the argument, with the word salad they used. But we also had Mike Dreitzer, who pretty much tore him apart. So obviously it's a problem for the industry, and there's some AI involved in that as well. How important is it for the industry to really stop that?
Well, and I spoke about this earlier today. My message generally in that presentation was, we as an industry have to stick together. The American Gaming Association is a big part of this. The licensees on the land-based side across the country, our regulators, the attorneys general across the country, lawmakers. we're sort of under siege right now.
No, don't forget the tribes.
Of course.
I was at the Indian Gaming Conference last week in San Diego, and they were all up in arms.
Well, when I say American Gaming Association, I'm talking about the tribes as well. They are they are members. I think that the membership of the AGA, we have full alignment on the threat that this is, and what we need to do at the state level and at the federal level.
Right.
And I think that I said this earlier. That this question around are sports contracts and swaps, are those on prediction markets? Is that legal or is that illegal?
Right.
The CFTC says it's fine.
Yeah.
At the federal level, these are swaps, and states say you're violating our laws and our regulations. And so the faster this gets in front of the U.S. Supreme Court, from my perspective, the better. And I think for the industry, I don't know where the ultimate outcome of the U.S. Supreme Court will go, but the sooner we know what the playing field is, it needs to be a level playing field where we all understand what the rules are, and if prediction markets are something that the industry is ultimately it's gonna be a part of our industry, whether currently we like it or not. The sooner we know that, the better.
Yeah.
Because you have, for example, Chairman Dreitzer, you mentioned on that panel. I think he's doing an outstanding job. He hasn't been in the job for very long, and he's doing an outstanding job. And I think on this topic of prediction markets, he's made it very clear this is illegal to his licensees in the state. Don't do it here. Don't do it anywhere.
Right.
Okay. Not every state has done that.
Mm-hmm.
Other states have said, maybe the attorneys general have taken the position, we believe this is illegal, and then it's don't do it in our state.
Yeah.
There's a difference there. So some licensees decided to leave Nevada once he said this. MGM's not going anywhere.
Right.
Caesars isn't going anywhere. Penn's not going anywhere. So we're playing by different rules.
Yeah.
That's not good for the industry.
Yeah. Right.
Some are in prediction markets and state-regulated OSB and iGaming. Some are just in prediction markets. And then some of us are on the state side. We're going to do whatever our regulators tell us we can do.
Right.
And we're not going to do what they tell us not to do, not just in their state, but in any state. So we need clarity. And I think as an industry, we need to stick together, and we need to keep pushing and fighting. And the sooner we can get to some outcome, whatever that outcome is, it's probably U.S. Supreme Court decision, the sooner the better.
Mm-hmm. Great. So let's go back to land-based for a second here. Again, your friend Tillman, if he does take over Caesars, that's going to impact a lot of the regional markets that you're in. Take Lake Charles, for instance. Now he'll have that and the Horseshoe property. So would do you think he would sell the properties where he's got duplicate properties, or one of them? Or?
Well, it's right now it's speculation.
Sure, right, of course.
You and I are reading the same things. I have not spoken to Tillman about any of this.
Yeah.
I have not spoken to Tom Reeg about any of this. I know both of them well, but obviously I wouldn't go there. They wouldn't go there.
He just canceled speaking here, so we'll see. Maybe there's something going on.
Who knows? There's a lot to read into, right? There's a lot of articles written about this.
Right.
But let's go down the path of if the rumors are true. Yes, there would have to be divestitures.
Right.
There's lots of ways to think about that.
Yeah.
You can sort of form two different companies as opposed to doing one-off divestitures. I don't know how he would be thinking about that, but there would be concentration issues in a number of states and a number of markets. And here's what I would say, just taking a step back. The gaming industry in the publicly traded markets is so beaten down right now. And I don't think, and I'm not the only one, I think Bill Hornbuckle and Tom Reeg and Tillman and others would say the same thing, which is for the cash flows that these businesses generate, we're not trading at the multiples that you would expect. These are significant free cash flow generative organizations, companies. And I think activity right now is good.
Yeah.
Because what's happening if the Tillman Caesars rumor is true is you have somebody recognizing that there's dislocation in where these companies are trading, and they plan to take advantage of that dislocation. That tends to wake markets up.
Yeah.
Right. So I think activity is good. Again, if it's true, and we'll see. Tillman, I wouldn't put anything past Tillman. He has the capacity.
Sure.
He's brilliant. He's creative. He's aggressive, and he times things well.
Yeah.
He hasn't become a billionaire from luck.
Right.
He's a very, very talented businessman, and so we'll see how this plays out. And we're going to obviously want to stay close to it, because if it does happen and there are divestitures, there could be some assets that could be interesting to a company like PENN.
No question. And we didn't even mention that he's the largest shareholder of the Wynn Resorts as well. So, on
is.
top of all that,
Yeah, that'll have to be solved for us in some way.
Yeah,
I'm
right,
sure
right,
you put plenty of thought into that.
Right. So you've been a target of a lot of activist investors over the years, and most recently, I'm forgetting the name of the company right now, but
HG Vora.
Right, and they just appeared before the Nevada Gaming Control Board and kind of got slapped down a little bit. They don't have to be licensed because they own less than 10% of your company, right? Why do you think they went to be licensed?
I don't want to speak for them.
Yeah.
We operate in 28 states if you count online sports betting. If you just count land-based casinos, it's 19 states. So there's a lot of rules to play by.
Right.
And if you want to get involved in the strategic part of the company and the governance part of the company, and once you become a 13D filer, you're telling the world that's what you want to do in some way, shape, or form, then you need to figure out what these states would expect of you, whether you own 4.5% or 9.8%, or what your derivatives position. There's all sorts of things to think through there. And so I don't want to speak for them. But we did just recently settle with them. I'm not sure if you saw that.
Yeah.
And we ended up as part of that settlement with 3 new board members, and I'm thrilled about. I think we really hit a home run on all 3 of these board members. And we also added 2 the year before, Carlos Ruiz Sanchez and Johnny Hartnett, who have been really strong board members. So we have a board of 11, which is a little bit larger than we've been historically. We're usually around 9 or 10. But you look across the skill sets, the experiences. We have 2 now that have a lot of online gaming experience. We have folks that have casino experience. We have folks that have consumer goods experience. We have great marketers on the board. We have David Handler, our chairman, is he is the founder of Tidal, which is a boutique advisory investment banking company. Worked for Centerview for years. Super talented, one of the smartest people I've ever met in my life, and he's such a dear partner and friend. And he plays this great role of provocative and provide great guidance and to challenge.
Yeah, sure.
Which I think is the role of the board, is all of those things. Right. There's no rubber stamping at PENN, and the board is it's larger, but I would say we have a lot of talent on the board, and so we did settle with Vora, and we feel like we're in a position now to just really look forward.
Right.
And we actually haven't had a lot of activism in the past. HG Vora was sort of the first real activist activity 13D filing, at least since I've been at PENN since 2011. And activism is part of publicly traded, Wall Street. Yeah. It's part. It exists for a reason, and so it's fine. We've settled. We're moving forward, and what they're dealing with on the regulatory side, I don't want to speak to, because I don't know why or what they're doing in each of these states.
Right. So when I look at the history of your company, I mean, I remember back, and I'm trying to remember the name of the first guy that was involved, like Jack. I can't remember, but he came out of Houston and Texas, and built the company brick by brick, and you've really developed a real corporate culture there. Your predecessor Tim Wilmot, I know he developed you, so and you're developing all these other young executives, and it's an exciting place to be. Do you take a big responsibility, for developing that corporate culture in your company? Yeah,
I think from Peter Carlino to Tim Wilmot, and then to me, that's been a major focus for all 3 of us. Right. I would say I probably spend, I don't know, as much time on that as I do any other initiative in the company, if not more, is developing our talent and spending time, not just me, but our senior team, spending time with the next tier down that we see as having really high potential. We have a lot of talent at PENN. Right. We tend to keep our people. Our retention is very strong. And look, the industry's been through a lot. PENN's been through a lot. We really don't lose people. We keep our talent, and we promote from within a lot, not always. Sometimes you want to bring some outside perspective in, but I'm very proud of the culture, and it's probably the most fun part of my job as well. I love watching some of our leaders who I knew when they were supervisors and then managers and then directors and then general managers and then corporate. And so I lived that life. I grew up in the industry. I came up through the industry doing the same jobs. And I think it's the best way to learn. And I think it makes you a stronger leader over time. So yeah, very, very proud of the culture, and it's getting better every day, every month, every year.
It reminds me of the early Harris culture, you know. I mean, I know you worked for Harris as well, so did Tim. You know, with Phil Satry and Mike Rose and those guys that really instilled that in everybody.
I mean, I idolized Phil Satry. I don't say not like past tense when he was the CEO of Harris. I was when I started there in 1998, and I just set such a good example. I was 22, 23 years old. I didn't know anybody, and there's a town hall. Phil Satry's. I'm working in Las Vegas, and Phil Satry's there, and I'm waiting in line to meet him. And he looks at me and he says, "You're Jay Snowden," and I said, "Mr. Satry." He's like, "No, it's Phil." I said, "How do you know my name?" He's like, "Well, I was reading the Casino Journal, and on the very last page, they always have like a face in the crowd, like Sports Illustrated used to, and there was a little picture of me with almost like 10 other people who just got a job in Las Vegas." And he saw that, and saw that it was Harris Las Vegas, and he saw my name, and he like, I mean, that's amazing. That impacted me. I don't know if he remembers that. I haven't talked to Phil in a while, a couple of years. He's chairman of Wynn, as you know, and you know, that has an effect on you. You know, and I want to try to take the best of every leader I've ever worked for and put all that together and try to be, you know, the best of the best of the best in terms of what I've learned over time. And look, we all have our challenges. We have our challenges at Penn. I have my challenges as a leader that I'm still working on. But I've worked for some great ones: Gary Loveman, Phil Satry, Peter Carlino, Tim Wilmot. The list goes on. I've been very fortunate. I've met so many amazing leaders: the Tillman Fertittas, the David Cordishes. We talked about a bunch of them. And you know, you take a little bit here and a little bit there, and oh, that was really interesting, and I'd like to do it this way, or don't do it that way. But you know, and all those people we named have also been very good to me in terms of just providing time for me to ask questions. And I love to learn. I will always love to learn. And when you're around, you know, really impressive people and accomplished throughout the organization, we have some amazing people on our line level positions who are best in the world at what they do. And you're talking to them about their family, and you're learning something. You know, I don't know. I love the people part of the business. It's part of why I've been in this industry for a long time and plan to stay in it for a long time.
So what's next for Penn? You know, you mentioned this year is going to be a growth year in your individual properties, but is there anything on the horizon that might be exciting that you can reveal?
I'm very excited about how we're positioned right now. This is a year of execution for us. We've made a significant number of investments, both on the interactive and the retail side, over the last, call it, 5 years. They're starting to pay off now, which is great for your balance sheet. It's great for your shareholders, and it's great for your leverage levels. And so, you know, when you're in the position that we're in now, and if we execute really well, where the leverage is by the end of the year, and liquidity and dry powder, the setup is pretty nice as you look out to 27, 28. No new supply impacting us negatively. We have more openings coming. Interactive starts making money. And so you're thinking about being on your front foot and maybe playing some offense. Now, with all of that said, what does offense look like these days? As we say here today, it can be all sorts of things. M&A's there's not a lot, you know, you and I could sit here and talk for a half hour. Who would be a natural company for Penn to look at acquiring? There's not a lot of obvious answers. I think about this nonstop. In 2000s and 2010s, there were several. And we made several of those things happen. And I think we are built as a company to acquire companies because of our operating structure, our margin management, the people, the deep bench of talent that we have. So, you know, sometimes you just have to be creative. And I would tell you that that's probably the other most fun part of my job is the creative part. And we're always thinking about what the next thing or list of things could potentially be as a board and as a senior executive team. And I would say we're excited about the coming years, and stay tuned. We have some ideas.
Great. Well, Jay, thanks for joining us, you know, and thanks for being accessible and transparent with us. You know, that's always appreciated. And, you know, we love the company and wish you all the best.
Well, you're the best. I will come do this with you anytime I get invited. And thanks for having me. And, you know, thanks for everything you have done for the industry and continue to do, Roger.
Great. Thank you.